Dear friends, welcome to the monthly outlook on markets. April again witnessed a return of geopolitical tension in the Middle East, as Iran launched more than 300 drones and missiles towards Israel. This has stoked fears of retaliation from Israel, leading to a wider and long-drawn conflict. This had also put upward pressure on commodity prices. Hotter than expected inflation print in the US further weighed on global sentiments. Markets are now expecting lesser than 225 bips cuts by the year end, after previously expecting 3. Indian market valuations, with Nifty at 20 times 12 months forward P, is a slight premium versus its long-term average. We believe the valuation premium is justified for its long period growth, improving capital efficiency, and strong balance sheet. After a long period, we believe India is at the cusp of an inflection in capex cycle. This is driven by macroeconomic stability, indigenization thrust, aggressive decarbonization, push for higher global value chain, and infrastructure thrust, especially in the areas of freight and logistics. These are creating a confluence of opportunities for capex cycle to lift off. We expect a massive window of capex opening up on account of policy push via production-linked incentives, indigenization, digitization, and strategic infrastructure focus, especially in areas of railways, defense, and power. The recently released Prime Minister Narendra Modi-led BJP in its 2024 manifesto emphasized policy continuity and also increased the scope in its area of priority, especially in areas of housing, Ayushman Bharat, physical and digital infrastructure. This has also been followed with some big bang political agenda such as Uniform Civil Code, implementation of Citizenship Amendment Act, and One Nation, One Election. The manifesto focuses on broad-based development through various government programs and initiatives that will have socio-economic impacts, especially focusing on infrastructure development, manufacturing, and capex will remain the key priorities. Key economic proposals include focus on building India as a manufacturing hub, especially in areas of electronics, defense, aviation, railways, renewable energy, and also strengthening digital and physical infrastructure and empowering MSMEs. Providing piped natural gas connections to all major cities and towns is outlined as another priority. We believe investment opportunity in capex exist in following areas. Lot more will come up over period. These are not the entire opportunities and will keep looking for many more. To start with, China Plus One is a big opportunity. Supply chain shifts out of China triggered by US-China trade war and rising costs and policy uncertainty in China. This offers immense opportunity for India. While doubts are being raised about India's ability to scale up, experience in consumer electronics, especially mobile phones, lends a lot of confidence in the long-term growth prospects. Additionally, supply-side reforms, ease of doing business, and production-linked incentive scheme is gradually propelling a supply chain shift away from China, of which India is a beneficiary and so are Vietnam and Mexico. Another opportunity which we believe is pretty large is railways. This has been a sector which has been at the fulcrum of government capex in the past few years. There has been massive rise in allocation amid mandate for development, especially in keeping pace with high demand for freight and passenger traveling. Rolling stock opportunities in Indian Railways are arising at present through passenger coaches, electric locomotives, metro coaches, and freight wagons. Passenger coaches opportunity involves both expanding the number of coaches in use and replacing the existing stock of about 60,000 old technology ICF coaches to the new technology LHV and Vande Bharat coaches. Locomotives is another big one. In line with target to achieve 100% electrification, government has indicated adding 1,500 locomotives in FY25 alone. New locomotive manufacturing presents opportunity for manufacturers of components and assemblies such as braking system, axles, traction motors, bogie frames, rectifiers, and many more. Indian Railways is aggressively expanding track network and renewing tracking along with gauge conversion and doubling of lines. During FY4 to FY14, close to about 15,000 rail kilometer of rail track work was done, whereas in the last 9 years, that is between FY14 to FY23, close to about 26,000 rail kilometer of track laying work has been done. In the year FY23 alone, per day, 14 kilometer track was laid, and the target for FY24 is to achieve 16 kilometer per day track laying. Dedicated Freight Corridor Corporation is now deploying mechanized track laying using new track construction machines for the first time in India. This method has a productivity of 1.5 kilometer of track laying per day compared with only 200 meters being achieved in the traditional manual method. Network augmentation is expected to see a capex pipeline of close to about 6 lakh crores versus actual capex of 1.42 lakh crores through FY17 to FY21. Electrification in railways is another big opportunity. Another area where we believe which opportunity exists for long haul is defense. Prime Minister Narendra Modi's Atmanirbhar Bharat scheme in defense emphasizes indigenization through reducing import bill and resolving issues related to foreign equipment. The Ministry of Defense has announced various policy initiatives such as allocation of 75% defense budget to domestic procurement in FY24 versus 68% in FY23. There has been import embargo on items since 2020, which have been specified under 7 positive indigenization lists, setting up of strategic partnership models. Also, hiking FDI in defense to 74% under the automatic route and establishing 2 defense industrial corridors in Uttar Pradesh and Tamil Nadu. Focus on capital expenditure, especially amid higher indigenization, has seen defense outlays increasing from Rs 91,400 crores in FY17 to a record high of 1.7 lakh crores in FY25. Data centers offers another big opportunity. With the rampant digital transformation in India, sharp rise in data usage, growing requirement for cloud infrastructure, and data localization norms, data centers are emerging as a key source for capex in the digital space. India is on the cusp of a data center evolution. From a small fragmented industry, co-location data centers are transitioning into large setups. India currently has 138 third-party co-location data centers, which are operated by close to about 52 players. And this is a very concentrated industry. About 72% of this capacity is concentrated within 5 players and 90% among 9 players. Total IT capacity on power supplied is 737 megawatt. This may increase to close to about 1752 megawatt by 2025. Power sector is a very large area. New energy, green hydrogen will see massive capex thrust. We believe not only will renewable energy see large capacity addition, thermal power capacity addition will also be witnessed. to ensure reliable power, roughly 80,000 megawatt of thermal capacity is required by FY31. Capacity addition in thermal is restarting after long. Expected solar power addition may continue to attract investors. Total capacity of 3 lakh megawatt is expected to get added in the renewable energy front, including hydropower, by FY30. This will entail a capex of 14 lakh crores. By 2030, India aims to cross 4,50,000 megawatt renewable energy goalpost. Establishing energy storage systems has emerged as a critical step for the power sector. The cost of battery energy storage in India is expected to fall from 7 crore per megawatt in FY22 to 4.3 crores by FY30. PwC expects the requirement of energy storage to be as high as 5,50,000 megawatt, with mobility applications alone making up close to about 392,000 megawatts. Union Cabinet has approved National Green Hydrogen Mission. The initial outlay for mission is about rupees 20,000 crores. This includes outlay for site program, pilot projects that are being planned, R&D, and other mission components. Government is targeting close to about 5 million ton of annual green hydrogen manufacturing by 2030. We have increased our allocation to this part of the market and are continuously looking for new opportunities. Many more opportunities will emerge over period. We have also launched ASK Lighthouse portfolio, which will be focusing on these areas in a very focused manner. Thank you.